Good day, lovely people. Um, Today I'm going to enlighten on some of our candlesticks and some chart pattern that we normally found it on our charts, being the boom and crash chart or being the VIX chart. Now, if you are new to my channel, please subscribe, and if you are the first watching this video and you have not yet subscribed, please subscribe to the channel and hit the notification bell. Once there is any strategy or any information or any other product that I share, you'll be able to get notified and able to get use of it. Use that it has been explained, and you'll be able to be on a beneficial point. Now today I wanted to enlighten on some of our candlesticks and chart patterns. Most of us have been able to know some of candlesticks. Some have been able to know some of the chart patterns, but with PDF and other ebooks that you've been learning on candlesticks, how have you been able to identify it on a chart? And some of you too have not been able to read anything yet, but you usually learn from the YouTube. That is any video that has been posted on YouTube concerning what you are learning. You'll be able to learn from there. As it goes on, not everyone is good at reading books. Some do learn by video, some do learn by listening, so not all hands are not equal. So if you get yourself what you'll be able to do the most, then you practice it very well. As I have said, some learn by ebooks and PDF, some also learn by watching videos and listening. So this goes to those who watch and listen and practice. Today, as I said, we are going to throw more light on our chart patterns and candlesticks. First, we are going to tackle with pin bar. Pin bar formation has been something that people normally used on charts, and it can be found on every chart, being the boom and crash and being the VIX index, okay, and being the VIX index. So with that pin bar, we have two pin bar formation. We have two pin bar formation, and one is the inside pin bar and one is the reversal pin bar. So someone may ask, what exactly is a pin bar? A pin bar is a price action strategy that shows rejection of price and indicates a potential reversal as a moment or imminent. An inside bar, that is the first one is for a pin bar, and that is the reversal pin bar. The reversal pin bar, we have the bullish reversal pin bar and the bearish reversal pin bar, and with that we are going to identify it on the chart for everyone to understand. But the real meaning of a pin bar is a price action strategy that shows rejection of price and indicates a potential reversal. So that is why we give it pin bar reversal. And the inside pin bar is a price action strategy that shows consolidation and a potential breakout of a chart. It shows a potential breakout, okay, or a consolidation. So these are the two explanation of the pin bar. So how do you explain, or how do you get this pin bar? As I said, we have the reversal pin bar, and it is formed two reversal pin bars. That is the bullish reversal pin bar and a bearish reversal pin bar. Now with a pin bar, it has a long wick with a short body, a long wick with a short body, being it whether the bearish pin bar or being it whether the bullish pin bar. Both pin bars, that is the bearish and the bullish, have long wick with a short body, long wick with a short body. Now with a bullish, you are only making for a reversal uptrend, and with the bearish you are looking for a reversal downtrend. So with this we can identify our pin bar, and let me show you one here. I think we have one here. Okay, this is a bullish reversal pin bar, that is a long wick with a short body. We can term this as a pin bar simply because price was falling from this point up to this point, that falls to this point, and then created this on a higher time frame. And mostly we are looking for a pin bar on a higher time frame because we are trending on a swing and for a long term, not a short term. So you always look for pin bar, the reversal pin bar being the bullish or the bearish pin bar, looking at the higher time frame like 30 minutes, 1 hour, 4 hours. With a daily time frame, it could be a longer trade, and I advise you don't go with that. You are only looking for 2-3 days trade, then you are out. You look for another opportunity at another index. So 30 minutes, 1 hour, 4 hour time frame is advisable for you to identify a pin bar and able to trade on it. So this is the bullish pin bar over here. Another one over here. Let me make it a little bit wider. This is what I was saying. This is a bullish pin bar, a long wick with a short body, a long wick with a short body. So that is where price will be able to make a rejection over here and indicate a potential reversal. So once price gets to this point on H1, that is the 1 hour time frame, it was able to make a bullish pin bar over here, and price reversed back to this point as an uptrend. Okay, so we are looking for, let's look for a reversal pin bar. A reversal pin bar before we comes to the inside pin bar. That is where price is able to make a consolidation, or price is able to make a breakout. As we said, it's a long wick with a short body. So not every candlestick is, we will term it as a pin bar. It should be a correct pin bar. It should be a correct pin bar, and we are looking for a bearish pin bar. That is what we are looking for. Okay, let's move to the H4 time frame to see if I could find one. If I could find one. If I could find one, the bearish pin bar. Okay, let me go to this point and see if with boom 1000 I'll be able to find a bearish pin bar. Bearish pin bar 1 hour. Okay, we found one here. We found one here at this spot. This is a reversal pin bar, but since it closes the H1 candlestick with a bullish type, it's very risky because it could be an inside pin bar. That will be like it will be on a consolidation, or it will be on a breakout. So we are looking for a reversal pin bar that is closed in a bearish candle, and with that, confidently we'll be able to take a trade from that point. Let's see. Okay, good, we found one here. This is the reversal pin bar we are talking from. That is the opposite of this one. Let me see on H1. I think we found one here. Good. This is the opposite. This is the bullish reversal pin bar that closes in a bullish form, and this is the reversal pin bar that closes in a bearish form. Okay, so with this you'll be able to trade well and able to identify on your charts. You'll be able to identify it on your charts. So if you get this clear, okay, here is it. This is the bearish reversal pin bar that closes in a bearish candle. So you could see that price was able to fall. So if you are trading with this pin bar, always you have to wait for the candle to close. Always wait for the candle to close. Don't say that, oh, okay, since it has made a bullish up to this point over here, be able to let me put in a trade. And mind you, boom and crash deals with spike and trend. So if you are thinking, okay, price has fallen, that is, has fallen to this point, and it has created a bearish candle, mostly likely it's going to close in a bearish candle. Hey, you should check before. If you could do that, just check if that candle that is closing, okay, it's about to close on a bearish reversal pin bar, it's on your resistance level. If it's on your resistance level, price is likely to fall. So with that, confidently you can put in a trade over there. But if it's not on your resistance level, please wait for the market to close on this candle. Wait for this candle to close on the bearish pin bar over here for price to make a rejection and fall. As we all know that it indicates a potential reversal with a price rejection. So once price rejects at this point with the bearish pin bar, price was making a potential fall, and it falls to this point. Now let's quickly move to the inside pin bar that is going to make a consolidation. Now with this one, you'll be able to see that this, let me mark over here too, and this here we could term here as our consolidation box. Okay, as a consolidation box, and you could find some bearish and bullish pin bar over here. This is a pin bar over here. Okay, but since price was moving up and down, you could not term this as a reversal, but you always use inside pin bar for this. As the inside pin bar stated, that it shows that price will be in a consolidation, or it will make a potential breakout. So how do you find this? You see, this is also, let me find another one. Okay, this is what we got in here. We have another pin bar over here too. Okay, these are doji. These are doji, they are not pin bar. Okay, I think this are the two pin bar that we saw, this one and this one. And since it's inside a chart as an inside pin bar, there was a breakout over here and price moved boom up like this. So whenever you are trying to trade, always use the reversal pin bar, that is the bullish reversal pin bar and the bearish reversal pin bar. If you are going to make a buy, always make sure that the candlestick closes in a bullish form before you buy. And whenever you are selling, sorry, my chart always skip. Whenever you are selling, you always make sure that the candle closes in a bearish form before you take your sell. Whenever you are selling, make sure the candlestick closes in this bearish form before you make a sell. Okay, so this is the pin bar that you are going to learn about. And let's move quickly to the chart pattern, that is double top pattern. It's always forming both on boom and both crash. VIX as well. If the double top and the double bottom top formation always shows that price is going to reject from there and move towards another direction. That is where price will make a rejection. So you could see that here is a double top, double bottom formation. This is a double bottom formation. Okay, once price gets to this point, it rejects back and comes back to here again before it bounces back. Okay, so mostly on the double top and double bottom top always form the W formation and the M formation. The W formation and the M formation. So this is the double bottom and it forms the W formation. Once it forms the W formation, price is moving higher. Look at where it started from this point. One day, this is the second day before it falls. So that is the double bottom formation, and we have the opposite as the double top formation. This is also another double bottom formation, over here. We've been finding this on our daily chart. On every index. This is a double bottom formation again. Once price gets here, it bounces back. Once price gets here, it bounces back again. And since it forms the W formation, okay, it forms the W formation, that is from here to this point. We have the W formation to here, then to here, it bounces back here before it enters here. So that is the W formation. Whenever there is W formation, it's telling you that price is in the double bottom formation, and we are still looking for the M formation, that is the double top bottom formation. Double bottom formation and double top bottom formation. Okay, let's move to VIX. And see if we could find one. If we could find one. Okay, one is here. That is that is this one, that is this one. Once price moves from this point, point here, it moves to this point, price bounce back, it moves to this point, and it comes back again. So whenever price move as in this chart, the M chart and the W chart, price normally it moves to price normally trend for a longer time before it changes its direction. Whenever there is double bottom or double top bottom, price always move for a longer time before it makes another rejection. So this is the opposite of what we saw it on the boom 1000. I'm currently on this trade because I know definitely it's going to bounce back. I'm still on it. Okay, I have another one too here. Now next time you'll be looking at how you could trade spike. You could trade a spike with this candlesticks formation that we just learned earlier today. We'll be using it on 1 minute time frame on how to catch spike very easily, and that is what I've been using. People could term it as price action, because all strategy or everything that is technical instrument are always used as price action. So we'll be able to tackle that on how you could able to catch spike very easily using the price action. That could be some trend lines and some reversal spots. How we could make a reversal spot. Looking at this, you could see price move to on the 30 minutes time frame. This is a bearish pin bar that we are struggling or we are looking for. Okay, once price gets to this point, it bounced back because I could see it was on the resistance level. As I draw this line through, it was moving towards my line as a resistance level. I took the trade over here. Once price fall, it closes on the 30 minutes time frame as a pin bar, so I couldn't close it. You see, once it makes a bearish pin reversal point. Look at the next candle on the 30 minutes time frame. It makes a small doji over here, because once it created this reversal pin bar, price is making a potential reversal, so there is no way price will go up again. So it's rather falling, and it could fall up to this level or up to this level. It could fall to this level before it bounce back again, or it could bounce back to this level or this level before price moves up again. Once it moves up again, and where this formation is formed, it forms a pin bar over here. So once price moves down here and goes back again to our pin bar that is here, once price moves and comes back here again and it falls, what we are going to look for is the M formation. And with the M formation, we are saying it's termed as the double top bottom. So once it forms the double top bottom, price could see that price will fall very long for a longer time, because once it gets here, look at how it has bounced back. So if we were able to see that price gets to this point and bounce back to our resistance level, created another pin bar or created any doji for a reversal, you could see and the M formation, and when it forms the M formation, it is the double top bottom, and price could fall for a longer time. So this is where we end our class for today. We will continue with the spike. As I said, we'll continue with a spike on how to catch it with 1 minute time frame on the price action analysis, that is using the trend lines, using some reversal spotted points and other indicators to able to catch spikes. So until then, we meet again. And as I said, if you are new, just subscribe to our YouTube channel, hit the notification bell, because there are always some classes, some indicators, and some strategy that I'm bringing out very soon, so that you will not able to miss out such vital information. Until then, we meet again. See you guys next time.